Greetings, everyone. Let's go on ahead and review the portfolio here. Right now, it seems like the portfolio is up $266. I'm up 1%. Today is looking like a good day, and we're just going to review some stocks. For the past week, I am up 0.59%, so looking good there. In the past month, I am up 3%. In the past 3 months, I'm up 5%, $1,195. Pretty good to see there. And the past year, I'm up 8%, so I can be doing better. I don't think I'm beating the Dow Jones or anything, but that's something that I would take any day. 8%, nothing to sneeze at. Pretty good return. I'm up $2,024, and my all-time is up almost closer to 11%, so $2,482. So let's review the portfolio, guys. Right now, the markets are open. You guys can see a lot of volatility going on with these stocks. Apple, 203. My position is still 179.76. Now I'm up 13%, so Apple continues to do well. The whole theme behind today is that interest rates, people are looking at the Fed, and the market is seeing a lot of what it likes. So a lot of these stocks are going up. 1% on Apple. Pretty good stock. It's a pretty good company. Really a company that it really doesn't matter where you buy it as long as you have a long-term mindset. PE ratio is just over 15 or so, but I bought into somewhat low here. I could have gotten into lower as far as AAPL, but solid company. I like them a lot. Let's take a look at Pfizer, $44, up 1% today. Pfizer's been absolutely crushing it. This stock is probably worth around $50 or so, at least in my opinion. Maybe around $48, but I continue to hold, and I continue to see some nice capital appreciation. 209. I am up 10% on this stock and an average cost of $39.89. So I wanted to buy this company once it hit that $39 mark, and right now it just seems that Disney hit a 52-week high. So that was a pretty good buy. Pretty good buy there. I will quickly review Disney and just shortly, but right now Johnson & Johnson, 141.81. Average cost $39, up $25 on Johnson & Johnson. I am not going to buy any more Johnson & Johnson because I do believe they're a little bit high, but this is a company I did not buy on sale. I just wanted them in the portfolio because they were a solid, blue chip company. I have a price target of Johnson & Johnson around $160, but again, due diligence. Please review your due diligence before buying any of these stocks. I like this company a lot, and I would continue to hold. I do see Johnson & Johnson probably it's fair. I would say it would be fairly valued around $120, closer to $125 or so. But I did buy into the high. 3M going back down here, 3%, got up all the way to 173 or maybe 172. Then starting to go back down a little bit. Now starting to go back up. This stock is part of the Dow Jones, so a lot of what the Dow Jones does, it heavily reflects off this stock. So 3M is I bought 3M at a 3.5 dividend yield, and P ratio was, I do believe it was around $15 or so. I mean, not $15, 15% or so. But again, dividend yield is at 3.5. Good company. Is a company that has been going through a lot of struggles. You guys can tell by the 1-year graph. Complete volatility right here around that April 29, 2019. You can see the tremendous spike down. And in the past 5 years, there's been some slight growth, but up 14%. So it's not bad, but it's definitely underperforming when you compare it to like all these high-flying tech stocks that are out there. I believe some companies in the Dow, like Boeing, is doing better. A lot of people probably like Boeing more than 3M, but I continue to hold 3M. I have Boeing I have some of Boeing in my M1 finance account, but I don't think I'm going to be putting them in my Robinhood portfolio. Let's take a look at Enbridge, 36.83. Continues to do very well here, 6%. I'm up $116. Pretty good dividend yield on them, and again, very diversified. I talked before in the last video how I like diversified stocks. I like stocks that do multiple things, and this is one of them. This is an international stock, Canadian Energy. I do like I think they are investing in some utilities. There could be a utilities play here, but I definitely do think a good energy stock or a good commodity for a company like this is pretty good and pretty decent market cap, and again a very very good dividend yield on them. So Enbridge just continues to amaze me as far as owning them. AT&T, $33.72. Right now, 100 shares. Total return of $117. Looking very well with them. AT&T is starting to go back up a little bit here. Up 3% in the past month. And the past 3 months, it's up 6%. So definitely, if you would have bought it when it was around that $29 mark, as you can see right here, a lot of stock markets pretty much fell around that December 24th mark, but absolute steal with AT&T around that $25, sort of $28 mark. My average cost is $32.55, but you guys already know I've been in and out of AT&T. I've been selling, I've been buying back in, and I've made pretty good money off this stock. So I will continue to hold, and I will continue to get paid very well, especially with these dividends. Let's take a look at the dividend. Per share, 51 cents, and total amount, since I have 100 shares, it'll be $51. So $51 is coming my way, and that's a big thing for the portfolio, is it continues to spike up. Let's take a look at Amazon, doing very well today. Amazon has breached the $2,000 mark, so I definitely thought that was very realistic, and this stock will continue to go up. Amazon is completely dominating everything. It's completely shutting down the retail sector as far as its competition. They are monopolizing everything, and I just like the stock, so I put them in the portfolio for some growth opportunities, and that looks like it's starting to look like a very, very good ideal to put Amazon into the portfolio. $154 for a total return of 8%, and my average cost is around $1,800 or so. Portfolio diversity 8%, but growth opportunities. That's the reason. That's the whole point of Amazon being in my portfolio. There's no dividend yield on them. It's a very very high PE ratio, something that I normally would not buy a PE ratio like this. That is abnormally high, but the market cap is obviously good. It's almost $1 trillion market cap. A company that's not going anywhere anytime soon, and I just believe that there's a lot more growth going from here. So. And we quickly saw Disney hit a 52-week high, $143.72 now. I continue to hold 15 shares, 139.58, and my total return is $62. So Disney, a great company. I like the trade off from Altria. I had Altria inside my portfolio, and even though I did get paid a dividend with them, let's quickly take a look at Altria's dividend. Did pay me $40 for 50 shares from when I last held them. But something that about Altria, the dividend allowed me to exit the stock because I did take a loss with Altria. Altria, when I sold it, I lost about $120 or somewhere around there, but I got $40 back. So these dividends are very helpful in that regard. So let's take a look at Disney's dividend. They actually did pay a dividend, and it's kind of odd with Disney's dividends because when they pay, they only pay twice a year. And unfortunately for me, I did capture their dividend, $13.20 for 15 shares, and per share is 88 cents. So great company for Disney. I like what they're doing, and that's why I put them in the portfolio. New position in the portfolio is Delta Airlines, $59.23. I only have 3 shares of them. Portfolio diversity 0.71%, and total return $1.70. So Delta Airlines, this is a new position in the portfolio, guys. Pretty good dividend yield on them. Very friendly PE ratio. This, to me, when I look at stats like that, I definitely think that Delta Airlines may be a bit of an undervalued play here, but I'm going to do some more due diligence on this stock, especially looking at that balance sheet, see if there's any debt going on there. But from the statistics that I have looked at, I was very impressed, and that's why I bought some more Delta Airlines. And not to mention that they're one of my favorite airliners. I like riding whenever I do, travel. I like taking Delta as far as my favorite airliner. So I bought the stock. And Delta Airlines, let's take a look at the yearly chart. The year chart, they're up 17%, so not bad, but I definitely think I'm buying into the high here because the 52-week high is $61.32. So it's right at $59 or so. But I'm going to continue to buy Delta Airlines. So I'm going to have a project in the past 5 years, some very good growth, 54%, up $20. Let's take a look at past month. And so yeah, in the past month it has been spiking up, but I bought in at $58.65, and I would continue to buy Delta Airlines on its bad dip days because I really think that this company contributes to the portfolio. It definitely rounds out the stocks and what I'm trying to do with the portfolio as far as compound investing, as far as reinvesting my dividends. It's a very good dividend yield on them, and I just like them. I like them as my favorite airliner, and I just like them as a stock that the portfolio would want to take a look at. And also, Buffett has a lot of this. He loves the airliners, Southwest, Delta, all of them. So I'm gonna go with Delta here, and I'm gonna continue to buy until I'm satisfied, I guess. But Vanguard Total Stock Market ETF 152.73 right now. My average cost is 121.67. So I continue to hold this ETF. Solid buy, solid return, solid dividends. Continuing into the portfolio, SPHD and PowerShares S&P 500 high dividend, low volatility ETF, $42.70. Up really big on this ETF. Average cost 38.58, 100 shares, and portfolio diversity is 17% or so. Total return looking good today, $20 and. Today's return $20 and total return $411. And if you look at all the dividends that I've been getting with the stock, I'm probably up some $500 at this rate. Let's take a look at the dividends. Dividend yield for June 28, $15, $14, and I also said how I thought it was odd that this dividend yield is increasing over time. So this is one of my favorite ETFs. I'm going to continue to hold, and I'm going to continue to compound invest. And I haven't thought about doing any options, call options with SPHD because it's not an ETF that's very liquid. The volume is not very high with this ETF, and the market cap is it's only $3 billion. But the main selling point of this ETF is that monthly dividend and its ability to grow over time. Past 5 years is up 36%. So if you held it throughout the past 5 years, and you'll also be factoring the monthly dividends that you'll be getting with the growth, yeah, just really really up with this ETF right now. So. And that's it, guys. Portfolio is starting to trend back a little bit. We're still at $25,048, so it's peaked the $25,000 mark. And what that also means is that now I have unlimited day trades, so I can buy stocks, I can get out of stocks, and I won't be penalized for my day trades. So that is also a milestone that I have factored in. I'm not really a trader by default. Sometimes I do look at my portfolio throughout the day, but I try not to do that because I don't want to touch what I have. I think I have a good portfolio here. But $25,043, and I have unlimited day trades. You guys see a new position in the portfolio, Delta Airlines. I thought that's a good play there. Maybe not a particularly good buy at this point, but I'm going to continue to buy Delta Airlines all the way down. So that's going to do it for portfolio, guys. I hope you guys have a great day, and I'll see you guys next time.